Hey guys, I just wanted to break down my answers to this lesson on personal finance, which is why should I invest? And I'm going to just give you my personal experience, my personal viewpoint on it, and discuss some of the vocabulary here. So basically, what is investing? Okay, so in personal finance we talk about saving money, right? And at some point you have enough money saved where you can do something with it um, that's going to give back to you, right? Your money is going to be growing over time. There's a lot of different ways to invest. Probably the most common way is the stock market, but buying a house is another way to invest. So it's a way that you can put money into something that will give back to you as time goes by. All right. The reasons for investing, the main one is that your money is going to grow over time, and um, it's not just going to sit in the bank and just stay the same amount. And so we know that compounding can improve the amount of money that you have. Um, Talking about inflation, that's not something that I want to discuss that much, but you want to be able to grow your money faster than the prices are changing of things that you're buying your money with. Otherwise, you're not really keeping up. Um, so, how does compounding build wealth over time? We've been talking about that with exponentials. And then, how does investing contribute to wealth inequality? Well, the people who know how to invest really well are the people who are billionaires. Okay, they know how to invest their time wisely. They know how to invest their money wisely and grow it at an amazing rate. So those are things that we want to discuss and try to learn how to do. Um, this lesson talks about the stock market returning 6% on average. So there's ways to grow your money faster than that, and I'll talk about some ways that I've done that. Standards here talk about risk tolerance. Risk tolerance is really important because um, you don't want to risk losing your money, right? Especially if it's money that could be necessary for you in some reason, right? But in general, you never want to risk losing your money. That's Warren Buffett's number one rule. So we'll talk about rates of return and then talk about inflation as well in this. So I want to look at the discussion prompts here. If you had $10 million, what would you do with it? So you had to discuss this. Me personally, I would invest the 10 million in things that are going to give me an awesome rate of return, and then I wouldn't have to touch the 10 million. I could not only live off the growth of it, but also do things for other people. So for me, my life is not about becoming wealthy because I want money. It's about becoming wealthy so I can help other people. That's the only reason that I would want to do that. So I could invest $10 million in real estate, building businesses where I can hire people to work for me and help other people out, help the community. So that's what I would do. And I'll discuss a little bit more about what I've done with real estate. The difference between here we're talking about the difference between saving and investing. Okay, saving is for short-term goals. All right, like for example, when I first bought a house, I bought a house for $1,000 in Detroit. I really didn't save much money, but I got a stimulus check. And it was enough to buy a house. So I did that because I was homeless, and it worked out to be one of the best decisions I've made. Right? That was a short-term goal. I said that I could do something really short-term, and then it took a lot of work to fix the house up and do things. Now I'm trying to sell it to someone for a profit. Okay. Um, that's an example of saving. Another example of saving might be for a down payment for something. For example, a car. Maybe you want to finance a car and it's a $10,000 car, but you want to save 2 or 3 thousand for a down payment so that your interest rate is better. And then, you know, you're closer to having it paid off and you're not having to pay a lot of interest. Obviously, saving for a down payment on a house is a pretty big deal for most people. A lot of people never get there. There's a lot of people out there that never own their own house. Okay. Also, if you're going to invest in stocks, bonds, I don't think are really something that a person would want to invest in at all, like pretty much ever, because stocks are going to grow so much better than bonds that there's no need to ever put your money in bonds. That's something I'm not going to talk about. But in terms of stocks, if I wanted to invest in stocks, then I would have to put a certain amount of money in there over a period of time. Maybe um, every 3 months, I would put $500 into stocks, and then as years go by, the money just keeps on growing and growing, right? That's an example of saving in the short term to use that money for a more long term thing. Okay. All right. Part C was the answer was compounding the interest over time. That's an investment. Okay. Another example of compounding interest over time would be if I bought a house, and then I decided to rent it out, and someone was paying me rent every month. That would be a return that I'm getting every month. So that money, I could then invest that money into something else, and then that can grow. And then also, my house is going to increase in price over time because of inflation. So that's an example of compounding over time. The money that you make from your investment, you take that and you invest it again and get more. So, all right. And then part D, something that involves very little risk. Saving money is has very little risk. A bank is not going to steal your money. They're not going to steal your money if you don't let them. Okay, you got to know the game. The banks want to steal your money, actually. Some people used to put their money under their mattress, right? So saving is going to involve little risk, um, but you're also not going to be able to grow your money. Part E, your account balance will be impacted by the market, meaning the prices of businesses, the prices of things. If you invest your money, it will be impacted by the prices of things. Okay, for example, if you bought a house and the prices of houses are doing really, really good, then your value of your house would be impacted by that. But if you know, sometimes housing prices go down. Rarely, very rarely. Once in a while, housing prices will, I guess, they have crashed before. So in 2008, the stock market and the housing market kind of crashed because they were overvalued. Okay, that will happen sometimes. So that's an investment thing. Okay, the advantage to starting to invest at a young age is that you will be having a lot more time to grow your money. And obviously, the biggest thing with investing is that you are putting your money into something that you know is going to long term benefit you and other people versus just wasting it on things that are useless and not important. Like, um, there's just, a lot of things that people could waste their money on. All right. So many things. Um, so you got to protect your money and also use it wisely. Investing is a more powerful tool because you can grow your money, and then the money that keeps on growing, there's more to available to do new things with. Okay, that's how people become so rich. There's a video here on trading versus investing. Trading is simply not a good idea. Trading is when a person is in the stock market and buying and selling a lot, like all the time. They're buying and selling and buying and selling all the time. The problem with that is it becomes a gamble, and it also becomes a way for people to lose their money quickly. All right. What I'm saying is it becomes a compulsive thing where they can't stop themselves from gambling in it, and it's not something that they just long term are investing in something for a long amount of time and just patiently waiting. Okay. So trading is something that is a bad idea because many people have lost all their money doing it, and most people don't make money doing it. So why do it in the first place? I would skip this part of this because this is this little part right here. I'm sure you learned a lot from the video, but that's my viewpoint. I actually was an options market maker trader, and I lived in New York City, Wall Street, when I was 23. And I know that trading is people make a lot of money, but you have to be very patient, consistent, and you have to know what you're doing. But most people, like I said, it doesn't. It's not a good idea. I wouldn't recommend for even myself, and I know a lot about investing, right? So again, here it says that the stock market projected growth is around 6% per year. I think it's a little more than that. In general, it's near 10%, which is actually extremely good, especially if you're putting a little bit of your money in your savings into the market, into stocks every once in a while, um, consistently over time. Okay, me personally, I don't invest in the stock market. I invest in housing because I think that housing grows faster than the stock market. So all of my money is going into that, and it's been very successful for me. Okay. Also, business can grow by way more than 6% per year. So if you have business ideas, you can invest your money into a business idea, but you need to be able to make income off of that. All right. And a lot of times businesses can make way more than that, way more than 6% per year. Only problem with that is that stocks, you don't have to work for it. You just put your money in a stock and you just wait, and you just wait and you get paid. Dividends are the best way to make money on stocks, but you have to have a good amount of money and consistently go into buying stocks to get your dividends to grow. Um, there's a lot of good videos on dividends on YouTube, and a lot of people who've shown that that's the way that they make a lot of their money now. Okay. But then anyway, that'd be another one going back to the first question, which is if you had $10 million, what would you do with it? Well, it'd be nice if you invested all 10 million into dividend paying stocks, then every year you'd make nearly probably $1 million just off of the dividends and growth of your stocks. So you'd be making $1 million a year off of your 10 million. It would just grow that fast. There are ways, like I said, like investing in real estate would probably grow at least that pace as well, depending on how you do that. There's ways to find houses that are a really, really good deal, and I've learned how to do that. Okay, let's move on to inflation. So, you, if you've been watching the news recently, you know that inflation is higher now than it's been for quite some time in the United States, like 40 years. Our inflation rates are right around like 9%, and normally they're 2%, which means that every year the prices of things are growing by $9 out of every 100. Okay, if the prices increase, that means your purchasing power is going to decrease, which is question number one. Number two, what else is impacted by inflation? Well, all of these things actually are. Wages would be affected because people are going to need to be paid more. So salaries need to go up just like everything else. Okay. So if inflation is high, that means wages are going to be increasing, and they typically do. Savings would be affected by inflation in that your money is sitting in a savings account. Now you can't buy as much as you could before because the prices are more. So if you have $1,000 in your savings account, it won't buy as much as it used to. Okay. Your debts, how much money you owe to people, right? Um, the value that you owe isn't going to change, but the amount of money that you have is technically going to be worth a little bit less. So um, because your wages are increasing, so your debts wouldn't seem as bad, if that makes sense. So it would actually make your debts sort of a little less compared to the fact that you should be getting paid more, right? The last one is interest. So you would have to have a higher interest rate on your money, on your investments to keep up with inflation, right? So interest would be affected. You would need